This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil. Going to give you a stock market update today for Friday morning. So what a difference a single day in the market can make. Very violent selling on Fed Day this week. All right. And I think it's led to some things that we definitely want to talk about and what that could mean as we flip over into 2025. So let's go ahead and get going with that. Now, if you want to learn some more about these techniques, especially multiple time frame trading using MACD and ADX, I would suggest starting with the book. You can go to rabilstockresearch.com/book for more information. Also, if you do like this content, please hit that like button and also subscribe. Okay, let's go through the market conditions to start out. We did lose a little bit of bullishness this week. We dropped off. Now, that's kind of typical when your peak in bullishness is going to happen at these levels here, right? And then as it starts dropping, you're going to start to see these shifts. So we're still up in that danger zone above the 40%, which is the difference between the bulls and the bears. There's 43% more bulls than bears still. We were up in the high 40s and we've dropped down a little bit, but I'd still consider this negative at this point. All right. The overbought oversold oscillator has come down. But one thing I did want to point out, as this is pushed higher, we have not seen the RSI. So really since this point right here, actually, yeah, this peak here, we made a new high starting here and RSI has continued to kind of diverge. All right. Now, if you notice, we've been basically holding above the 18 weeks. So it's not like there's been some operative signal to take advantage of this. But what this is telling us is kind of like the underlying there's not a lot of strength in this move based on the fact that this can't get itself back above the 70 level, or at least not a lot of new emerging strength. When I go into the ADX, you'll see that this is confirming what we're seeing in the ADX. But we did get the RSI 5 to drop down to 43%. We're down into neutral, just below neutral. So that's a little bit more appealing than being in the overbought condition that it was. So let's just look at the rest of this. The volatility, both of these are neutral. I'll go into that in a minute. The trend, so the daily trend is now neutral. The monthly and the weekly have not shifted yet. The monthly momentum is still in good shape, but the weekly and the daily, I'm moved to neutral now. I think they're in a little bit more precarious position. All right, let's go through and look at some of the details with this. And one of the things that just jumps off the page is the big red bars that have formed, right? A single day that really created, I mean, you can see, look, we can go back to May of this year. There hasn't been a monster red bar like this in a long time. It's probably the biggest red bar we've had all year, looks like it. Now, you could argue that the gap was a bigger red bar potentially if you fill that in. But in terms of like opening near where it closed the prior day and then just being pure blood red, I think that's the ugliest day we've had. Now, what does that mean and how does that affect our thinking? All right. The one thing I'll tell you is that instantly with one bar, we're starting to see a shift back, increase in volatility, and that turned the daily volatility to neutral. Now, if this were to turn up, if this keeps pushing a little higher, if we have another wide range day or a bigger range day, there's a pretty good chance this is going to move up and this is going to turn right back to the upside. All right. Now, there is a couple things that's interesting about what's playing out on the daily. We're coming into the 18-week line. Right, number one, and we're getting very, very deeply oversold. You can see these levels when we get way overdone like this, that we can get a snapback rally. Now, this isn't my game. I don't really like playing these deep oversold, nasty declines and trying to make a retracement rally off of it. But it is something you could be on the lookout for. And the way you would do it is go down to those smaller time frames. So if we get weakness and it comes down into this 579, 580 area, what you want to do is go down to a 5-minute chart, 10-minute chart or something like that and look for a legitimate reversal to take place probably like on a 2-minute chart, you're looking for some kind of a legitimate reversal. It could take the form of a where you have trend line in place, you break the downtrend line, and you start to turn up. And you're looking for signs of exhaustion in the ADX as well on that short-term time frame. All right. So that's something you could be on the lookout for if you're inclined to play that game. I'm actually looking at it this way. This was a violent decline. Look at how ugly this single bar was today. We tried to gap up, and then it came down and closed basically where it opened for the prior day. I don't think that's a good day. Now, I'm going to show you in a minute when I switch over to the other charts a strategy that you could look at if you're looking to trade this by just looking at the daily bars. All right. Now, the fact is we're closing in on the 18-week, and the 18-week is very important. We'll talk about that again when I flip over to the other charts. So let me just talk about this for a second. If you notice, one big red bar that has developed has kept this from this 18 from rolling over. This is still, I'm calling it neutral because it's below the moving average and it isn't declining. If we get another big red bar, or this bar keeps growing after Friday, then you could see this jump up, and this could turn right back up and get back on the upside track, and we'd still have a lot of risk based on the volatility. All right, so just a couple things you want to be on the lookout for there. All right, let's switch over. I mean, one of the things I've been talking about a lot, right, is the fact that this has kind of been pushing the end of the envelope, staying away from the 18 pretty much this entire year, right? Now, typically, you don't get a reversal right before the end of the year if you've been going up all year. So I'm still inclined to believe we could get a little bit of a push up and test before this starts to work its way back towards the 18. But the action, that's taken place over the last day or two is definitely concerning. I mean, you can't, and the thing is that based on what's taken place on the weekly chart, what I've basically been saying to my subscribers is this is a danger zone. I mean, this is a danger signal. The sentiment has been a danger signal. The volatility has been a danger signal. We've gotten enough issues here that you've got to be a little bit more conservative with trying to make money right now. You're trying to preserve capital rather than make a whole lot of money. Now, that doesn't mean you sell out of your existing positions, but you let them play out. But in terms of like putting new money to work, you just want to be a little bit more careful, especially now that we're seeing a little bit of strength in the seller showing up here, and we're getting this big red bar. Now, it hasn't broken the 18-week, and I think that would make it official if that happens, that this has failed. But there's enough weakness this taking place this week that I think we just have to be a little bit more careful. All right, so I did want to point this out. I don't talk a lot about the 4. All right, but let's just take a quick look at this. So I used to look for stocks that were doing this where they'd have this big bar. All right. And I'm watching the 4. All right. And then if you notice, we actually have this inside bar. I think it might have taken out this low by a couple pennies, but I would consider that basically a inside bar that stayed in the lower third of the range, essentially the lower third of this big red bar. Now, if for whatever reason they want to gap this up again tomorrow, all right, you want to watch its reaction at the 4. If we open up, try and push, hit the 4, and it turns back down through the open and it comes back down through this open here, that would be even a little bit more evidence. But you could just use the opening range. So if you open, you push down, and then you take out the open by a margin, right? And you got to fail at the 4. If you're doing this above the 4, I don't really like it. But if this is coming in and it's rallying up or whatever, and it tries to push into the 4 and then it comes back down through, I think that's a really good trade. I don't even have to look at the intraday trade because I know I've got this 4 pushing against. I know I've got all this violence to the downside. I know I've got strength. I know I've got volume. There's sellers in here. And I think what this wants to do, it's now going to probably start acting like a magnet to the 18-week, right? The 18 weeks down at 579. Call it 580 if you want. There's some pretty decent trading money that could be made in that situation. Now, the other way this could play out is that it could open poorly and come down quickly. So let's say it opens here and comes down quickly to 580. Again, if it plays out that way, then I'm probably looking for a trade back up to the 4 this way. Okay. And what I would be doing is what I said before. I would go down to a small time frame, look for a reversal on a small time frame, and see if it materializes. If it doesn't materialize, then this could get really ugly. All right. So that's how I handle using the daily bar. I literally used to have a daily bar like this. I would have a monster looking. This is when I was doing a lot of day trading. So I'd have like 10 days worth of daily bars. So I could see exactly what was going on and how it was doing in relation to the 4. And then I would go down to the smaller time frames and I'd use that to help with the timing. I think it's a really good strategy if you understand opening ranges and how to use that open that way. All right. So if you get a gap down, you're looking to play it back to the upside once it starts to hit support. If you gap up, right, and fail at the 4, then you're looking to play it to the downside. And I bet this comes down pretty hard, pretty quick. It'd be my guess. All right. So those are the kinds of things. Now, you use the short-term time frame to prevent you from guessing. If the short-term time frame is showing a lot of strength and it just keeps going and it works its way through the 4, then you know that's probably not going to happen. Now, one thing I will say, on this chart, this the midpoint of this, probably somewhere around 596, 597, I think is the key level to be on the lookout for. And what we can do is we can go to the hourly chart and we can sort of evaluate where that midpoint is. In fact, we can look and see what of this decline, the midpoint, yeah, it's actually right under 596 of the midpoint of that move. So actually, if I take this up to here, down to there, we're right around 596. Now, I like to give it a little room above that midpoint. So in other words, it can come up to the midpoint. And a lot of people are looking at that midpoint. They might bleed it back a little bit. So 597 is probably a good barometer. And what I'm telling you is this 597 level, I think, is pretty important. If we get back above that level, then they might have survived this decline. It might not be ready to go down right now. All right. And if it plays out that way, then we could get our little Santa Claus rally, work our way back up. And then next year, I think we've got to be a little bit more concerned. Now, I think based on the way this traded, look at the volume pattern. I mean, I like to look at DI. I mean, obviously, this was a low ADX breakout here. Look at the strength of this, but look at the volume. Massive, strong volume bars here. And then look at how this tried to rally on nothing. And then it finishes the day with another big red bar and heavy volume. See that? So this is telling me that the odds are there's going to be continuation. And again, I think it's acting like a magnet down to 580. I think that's where we're going. Now, that doesn't mean we're going to hold 580. We could break 580 potentially, but I think that it wants to come down and check out that 18-week. All right. So that's the way I'm looking at this right now. You can look at the 18 on the hourly as well. That'll help you give you a pretty good barometer of what the 4 and the 18 should be pretty close together. The 4 on the daily and the 18 on the hourly. It's not exact, but it's a good, they're pretty close. All right. Let me know if you have any questions, and we'll see you next time.